Hi guys, today we're going to be taking a look at VeChain. We're going to be taking a look on the macro level. We're going to be taking a look at the daily chart and the weekly chart, sharing my thoughts and opinions as to where I think this price action is heading in the kind of longer term view. This will be probably for like the next kind of week or two, going in towards the end of the month. As I get into this, smash that like button, subscribe if you're new to the channel, and let's take a look at VeChain's VET token. So here we have VET or VeChain paired up with USDT. We're on the 1-day Binance chart here. And well, we can see some pretty interesting things. Right? First of all, we have our white line coming through the chart here. This is your 200-day exponential moving average. Essentially, it's your long-term price action, and it is weighted heavily towards the kind of most recent price action. Essentially, the price currently is lower than this. Now, when it's lower than the 200-day EMA, that basically means that we should be thinking a bearish trend has formed for VeChain. Now, we have the yellow line. That is your 50 simple day moving average. This is quite simple in the terminology. It's just basically 50 candles averaged out. There's no weighting going on. It's just a simple moving average. And the price action has been kind of below this, teetering above it at times. And right now it's kind of facing resistance on there. We also have the light blue line coming through the chart. That is your 50 exponential moving average. Again, like your 200, it's weighted aggressively towards the most recent price action. But again, we are lower than that as well. So these are the moving averages on the chart here. And they are basically giving us a bit of a bearish view of VeChain's VET token at the point of recording. Now, if I draw in a trend line here, I don't like these personally, but they help kind of visualize what's going on. You can see that we have lower highs going on. Now, whilst we have lower highs, we also have higher lows. Okay, so basically the price action here is squeezing down into a bit of an apex, right? We can see here that basically we are unable to break the previous highs, and we're basically bouncing around, creating these higher lows, right? And this is a bit of an interesting place to be. I'm just going to move that over so that we don't confuse what's going on with this up movement and this down movement here, because they are actually two very different things. So as we can see, we've bounced up, or we pushed up here into a corrective pattern, at least according to Elliott Wave, which I'll get into in a moment. And here we can see that we have the 3-wave drop, 3-wave push back to the resistance, lower high, and then we're breaking down again. Now, this basically paints a picture that the market is indecisive. It can't decide whether to break out or to break down, and basically you're just getting weakness on the selling side and you're getting weakness on the buying side. Basically, the market just can't quite figure it out. Now, down here, we have the Stochastic RSI. The Stochastic RSI is an oscillator, as it's kind of called within trading, and basically this is showing us that the market is starting to overheat. Okay, so here you can see that there's weakness within this as well. Every time it's pushing higher, we also can see that, you know, we're getting it, or at least it's becoming a lower high than it was before. Okay, this is also showing us that we have a little bit of room to go, to grow to the upside on our daily chart, meaning that we might push for that 200 EMA again before having another push to the downside. Now, if I turn off the stochastic variation and bring in the regular relative strength index, RSI, this is a divergence indicator. Basically, it just shows whether or not the price action and the RSI is having any divergences. So here we can see that we're dancing around this 50 level. Currently, at the point of recording, we're at 51.92 on the RSI. Now, above 50, we're bullish, and below 50, we're bearish. Now, I've got to bear in mind that our 200 EMA, our white line coming through the chart here, is our trend filter. If we're above it, we're bullish, and if we're below it, we're bearish. So at the moment, with our price action being below the 200 EMA and our relative strength index showing weakness, as in it keeps getting lower and lower, also setting lower highs, dancing around this 50 level, the expectation is that it's more than likely actually going to move to the downside, not to the upside. I'd love to be wrong about that because I hold a pretty decent position in VET, but I think we're going to see another push to the downside. Now, let's get into the MACD histogram, because the histogram also shows this kind of depiction as well. So here you can see, if I just move that into view, that we have, again, lower volume profiles, both on the buying side and on the selling side. So you get a visualization of what's going on with these candlesticks from the MACD histogram. It's also obviously depicted in the relative strength index and the stochastic relative strength index. Basically, the market here can't decide whether to be buying or to be selling, and the participants are getting less and less. Basically, we're building up to a big moment, the moment where either the price action will break out to the upside or it's going to break out to the, or break down to the downside, right? And so I believe personally that the market's going to break down. So let's talk about why I think that. So what we have going on here is a lot of overlapping price action as we're coiling up, right? We had a three-wave push to the downside. We had a three-wave push to the upside. And I know some people who might watch some Elliott Wave analysis might think, that's impulsive. Look, we can see 5 waves, right? Wave 1, 2, 3, 4, 5. It's impulsive. But reality is that that's not really what's going on. If we take a look at the structure, I mean, we'd have to assume that it was some kind of diagonal-based pattern at best case, right? But we don't hit that 1.618, which is critically important for a wave 3 until you get into that high point of wave 5, or what would be a wave 5. So it's not really a 5-wave pattern. Now, it could, of course, be an expanding diagonal, right? Which would be allowing for the wave 3 not to be 1.618. But in that particular regard, wave 5 must be larger than wave 3. It has to be the largest possible wave. And if we go ahead and check the distance on a wave, or the theoretical wave 3, which would be this one right here, it actually would be larger than the... actually, I tell a lie. Let me just check that, because it's possible that maybe I misunderstood that structure, which is a very interesting kind of thing to say on a stream like this, or in a video like this. It's just peeked its ugly little head above the 1-to-1. Let me just check this low over here. This is the Saturday, the 12th of July. Right, it's very important that we get this right, which is why I'm doing the extra due diligence. This low is 23 or 2.307, and we can see here that we did indeed peak higher. So that does constitute a expanding diagonal. Now, in an expanding diagonal pattern, basically wave 3 can't be the shortest, but wave 5 has to be the longest, right? And there's no 1.618 requirement. So in that particular world, we would be looking at this idea of wave 1, wave 2, wave 3, wave 4, and wave 5. That does change things a little bit, because in order to kind of see that kind of playing out, we can't just have random 5 waves on their own. That doesn't happen. So in that space, we'd then actually be thinking this actually has the potential to break out upwards. Still not convinced, but, you know, it's what the data shows me. I still think this is going to break on down based on a 3-wave pattern from here, A, B, and C. But a B wave can't just be 5 waves on their own. So under the premise that this is an expanding diagonal based pattern, and we have a 3-wave correction here with another diagonal this side, then we would be looking for a move higher before we actually see any potential move to the downside. The expectations on that move would be for 3.53 to 3.957 cents. So that's our macro target for the month of September then. Would love to see it. I'm still not a convinced participant of that range, but we'll see how that kind of plays out. We're going to be looking for a zigzag pattern, an A, B, and C structure to play out here, which would then tie into the bigger macro piece, which is this one on this side, coming across to the low that is over here and targeting out again 3.492 to 4.073 on that higher side. You can see how that overlaps and how you have your target kind of conforming in there. This would then be a larger 3-wave pattern playing out just like so. Okay, I actually like that as a bit of a story. It would mean that our triangle pattern here is actually more consolidated into just the last few candles. And if we do see something like this playing out, well, then it could mean that we actually do see a bit of a break for VeChain into, you know, some new kind of move higher here. So that's going to be the analysis on VeChain's daily chart then. So that's going to be the premise. We are looking for this break higher. A little bit of a mistake that I was making there on thinking that this was going to break down based on these indicators, right? These indicators aren't telling us one way or the other. They're just saying that there's weakness across the board, but there's also weakness on buying and weakness on selling. So it's not giving us a definitive answer as to which way it's likely to go. I was just making the assumption that that was a bearish pattern, considering this bearish flag here and the weakness that we're seeing within the relative strength index. But actually, Elliott Wave is telling us that things are going to play out differently. Now, this is interesting. Elliott Wave tracks the buyers and the sellers and their behaviors, and it assumes certain things happen based on the behavior that we see. So based on this behavior, what we're expecting then is 3.5 cents to 3.9 cents. We'll have to see whether that plays out, but that's the idea. On the weekly time frame, a much bigger macro piece here, we are still looking rather bullishly for bigger moves to the upside, around 9.5 to 12.6 cents. Nothing has changed there, and that's a part of a much bigger play for the bigger ranges, which are 32 to 77 cents. So for the weekly chart to continue playing out like this, then we do need to see some interesting kind of stuff playing out on the smaller timeframes first. So all in all, I think VeChain's in a pretty decent position. We're looking for a small push higher. If it can break out of those ranges as well, we might see a more of a higher push towards the 9.5 to 12 cents. But, we'll have to first of all tackle that 200-day EMA and see whether we can get above there first before really making any kind of clear claims. So the analysis as it sits today is that VeChain is looking for a higher push. If you found this useful and informative, smash the like button. If you're new, subscribe, and I'll catch you all in the next one.